Welcome to all my subscribers and those who are still yet to subscribe. Welcome to this YouTube channel. My name is Patrick. I want to share with you 3 strategies that you can start with in Forex, especially if you are still learning how to trade. If you are still in the learning phase, these strategies are good to start with, and I'll explain to you how to apply them and why they are important. All right, so without any waste of time, let's get to the strategies. The first strategy you should consider starting with is a trend related strategy, and the reason why this type of strategy is important is because it teaches you the basics of market structure, which is very important in trading. I'll make a separate video to explain more on market structure, so please consider subscribing if you have not done so. Now, the basics of market of the trend related strategy is that on an uptrend, like you can see, this is an uptrend. You only look to buy, and you buy at the support line. At the support line, your first entry would be around here, because the first 2 touches would confirm that this is an uptrend. So at the third touch, that is where you would look to enter. You would buy right here at the support line. You would buy right here at the support line. Now, the reason why I did this is to remind you that on an uptrend, there will be a false breakout, or on any trend, you will have false breakouts. So while you are trading a trend, you watch out for a false breakout. Maybe one way to avoid that is that before you can take a buy right here or a buy right here, you wait for confirmations to show that this is really a buy entry. And those types of confirmations can be candlestick rejections, it can be a hammer, it can be an inverse hammer, it can be a bullish engulfing candle. So any of those can suggest that this is a buy entry. You don't just buy simply because the price is touching your support line. You wait for a confirmation to avoid these cases. This is only meant to hit your stop loss and collect the liquidity that is here, and then the price makers use it to push price up. It will always be there. You should always watch out for it. You won't have, very rare that you will have a smooth channel or a smooth trend. So expect the worst so that you become the best. So that is it for an uptrend. You look for buy entries. And another thing that you watch out for, I said you watch out for false breakouts, and then you also watch out for the real breakouts. You can't stick to a trend and only wait for it to come to your support line so that you buy. You also watch out for breakouts, and then at the breakout, it is also another opportunity for you to enter a buy. And you can confirm a breakout by waiting for it to come back to retest the channel. And then once the channel has been retested, you wait for price to push back up again and break the resistance where it bounced at when going back to retest the price, the channel. You wait for price to break that channel, and then once it closes above this new key level, that is where you look to buy, and then you put your stop loss somewhere right here at the channel. All right, another thing that you watch out for when trading a trend, you watch out for a reversal pattern. Okay, right here, this was an uptrend. You would be buying maybe right here, you would be buying right here, and then price starts to create a reversal pattern. This is a sort of a triple top. It can be an M, it can be a head and shoulder pattern. Once you see a reversal pattern, know that this trend is no longer continuing, you wait for a confirmation that this is a reversal. So market is changing direction. It is now beginning to, or it is going to create maybe a downtrend, or it is now going to be a ranging market. On a downtrend, it's almost the same thing. It's only the opposite. On a downtrend, you only look to sell. You sell at the resistance line. All right? You sell at the resistance line. Before you sell, or while you are looking to sell, you also watch out for false breakouts. Place your trade, put your stop loss slightly above the previous lower high. All right? While you are selling, you watch out for false breakouts, and you can watch out for those by waiting for a sell confirmation. And in this case, it can be a shooting star, it can be a hanging man, it can be a bearish engulfing candle, it can be the rejecting candles. All right, once you see those, that is where you can enter the sell. Okay, and you also watch out for reversal patterns. It can be a W, it can be a triple bottom, double bottom, it can be a V, it can be a inverted head and shoulder pattern. So you watch out for a reversal pattern while you are on the downtrend. The second type of strategy that you can consider starting out with in Forex is a candlestick related strategy. A candlestick related strategy. The reason why candlestick related strategies are effective is because candlesticks are not subject to repaint. They are not subject to repaint. For example, you can trade the bullish engulfing candle. Now, how? You open a higher time frame like the daily or the H4, the 4-hour time frame, and you wait for a bullish engulfing candle, which means every 4 hours you will be checking all the currency pairs and you are watching out for a bullish engulfing candle, especially on an uptrend, so that you increase your winning chances. You look for an uptrend, and then on the uptrend you wait for a bullish engulfing candle, and then once you see the bullish engulfing candle, you switch to a smaller time frame like M15, the 15-minute time frame, and then you look for entry patterns on the smaller time frame. That can be the entry patterns that I spoke about, which can be the hammer, the inverse hammer, rejecting candles. All right, and then once you see those entry patterns, you take your trade, you put your stop loss at the right place, just below the engulfing candle. You put your stop loss. You can use other candlestick patterns that you can find, like the examples that I have on the screen. All right, all those can be used for your strategy. You wait for the candlestick pattern on a higher time frame, and then you go on a smaller time frame to look for entry patterns. The last strategy that you can attempt when starting out in Forex, especially if you have problems with the first ones that I have mentioned, you can consider moving average related strategies. Now, the only disadvantage we have with moving averages is because they may be subject to repainting. All right, they may be subject to repainting, even though you can still come up with good strategies from moving averages, like the strategies I have shared in this channel. You can still come up with good strategies that can help you to make it in Forex, especially if mixed with proper risk management. Now, moving averages are good because if you are struggling in Forex, you don't have much to do. You just wait for the moving averages to show you whatever you are looking for, and then you can enter the trade. But I can advise that you make them your last option. Try to learn market structure. Try the above two strategies because they will give you a good training into learning Forex while you are on the learning phase. That's it for today. Thank you for watching up to the end, and please subscribe if you have not done so. I still have great information to share with you so you can make it in Forex. Thank you.